My name's Dave DeBow, founder of MoneyPartnerFormula.com, and this show is built for everyday real estate investors who are actively doing deals and looking to scale using other people's money. So if you're an active real estate investor and you want to get featured on this show to talk about your own real estate and capital raising experiences, then just go to daveinterviewsyou.com. Now let's get rolling with this episode, and remember to subscribe for daily interview content. Welcome back, folks. Have you ever thought or heard of investing in self-storage facilities? I'm sure you have. If you've watched any of our episodes or listened to any of our episodes, we have talked about self-storage quite a few times. But today we're in for a special treat because our guest is Matthew Horne from Storage Point Capital, and Matthew has a ton of experience in self-storage. So zooming in from beautiful Lakewood Ranch, Florida, Mr. Matthew Horne, welcome to the show.
Oh, thank you so much, Dave. Appreciate the invite.
My pleasure. So Matthew, give us a little snapshot. What does your portfolio currently look like? Like, give us an idea more or less how many different facilities you guys have, what areas you cover, that sort of thing.
Yeah, absolutely. So currently, we're fairly new. We started the end of 2020, opened offices in 23. Right now, we're in Florida, South Carolina, and Pennsylvania. We have a couple in PA. We just got our first acquisition in South Carolina. We have 5 in Florida. That's
Wow.
obviously home base.
Yeah.
From my background previously, I was with Cityline Capital where kind of I learned, the storage game. And, during my time there, we had built about 220, about $1 billion plus in acquisitions in about 4 years. So got to really see all over the country. We're in, I think 30 states-ish around there. So it really gave me a good blueprint to start Storage Point Capital.
Okay, very cool. So you worked for a really big company in this space, which is a smart way to learn the business because you're getting paid to learn. Smart,
Yeah.
really, really good. So those guys, it sounds like they are not just buying, but they're building facilities, that sort of thing. Are you also building facilities from the ground up, or you prefer to purchase them already existing?
We have a ground up development arm, albeit the last couple years, it's just really tough to make it pencil with ground up
Mm.
development where build costs were, where rates were at market rates, et cetera. There's only really a handful of places that really make sense to do it. And in that you find too much saturation,
Mm.
et cetera. So it's been challenging, but we're definitely open to it. We're trying to do it. It's just been, challenging, to get to that, to find the right one to get us started.
So, Matthew, a big part of your business is raising capital and showing investors what the big benefits of self-storage is as an investment class. So how do you kind of explain that? If you're talking to a potential investor, how do you show them what the big pros and cons of this asset class are?
Yeah, I think it's most people are familiar with multifamily, when you're
Mhm.
talking to an investor. So it's really multifamily without the headaches. You don't have to worry
Well,
about
yeah, without
toilets
without
and
toilets and
yeah, without toilets and running water. And the great thing about storage, you have a bad tenant, you throw them out, you clean their stuff out, you put someone in there, typically paying a probably higher price than they were. And rinse and repeat. So, there's definitely a lot of pros to it. The low overhead, being one of it. The management, everyone's doing hybrid remote models now, and apologize. That really it depends on the market. What type of market are you in? Is it, demographic wise, age? Is it young, sophisticated? There's different things you have to look into when looking at remote, versus, having someone, actually behind the desk 9 to 5.
so do you
So
do you
that,
guys have a mixture or do you mostly
yeah,
remote?
yeah, we do both.
Okay.
And typically, when the store is in a lease up mode or there's, it's a lower occupancy than you'd like, we like to have someone behind the desk, even if it's 4 to 6 hours a day. We want someone there to really, really help, move the needle with filling up vacancy. But on the other hand, if you have a store that's 99% occupied, one, you're probably running it wrong. You need to push your rates up. Two is there's not a whole lot for that person to do. So, if you have a good call center, you can really run things pretty seamlessly and, have someone with boots on the ground, you're paying part-time to come, change lights, sweep out
Yeah.
units, etc.
Okay. I got a few questions for you here, Matthew. So I like what you said there. Like if you got a new facility that you've just taken over, it's not leased out yet. You like to have somebody there in the office helping to move the needle, you said. So how does a live person help move the needle more than just running it 100%
Yeah.
virtually?
Yeah, you still have there's still a lot of people that are, quote unquote old school. They
Mm.
like to go there, they like to shake hands, they like to have a conversation about what unit types they need. Well, they like to ask, well, this is what I'm storing, what do you recommend? You kind of lose that touch online.
Yeah.
Sitting down with someone that's been trained properly, they can tell if it's a 3-room house, it needs to be an X unit. If it's, they're moving a 5-room house, it's this unit. If they're just
Mm.
moving a 1-bedroom apartment, it's that. So I think just having like a professional guidance on there, for someone who's not that familiar with storage and kind of having them walk them through that process definitely adds value.
Yeah. Yeah, that makes a lot of sense. So, and that's you. I mean, not that long ago, that was every self-storage facility had
Yeah.
somebody in the office doing stuff, right? It's relatively recently that has become all remote like this. So, Matthew, speaking of saturation, I'm up here in British Columbia, Canada, and big wide open spaces, not that much population relatively speaking. And when I go down to the States and I travel around, it seems like everywhere I turn, there's a self-storage facility. And I can only imagine what it's like in Florida. There must be so many of them there. So how do you determine, like, how do you figure out which market to go in so that you're not getting into one that's just so saturated? But like, isn't that a
Yeah.
challenge these days?
Yeah, I mean it's really a science and just understanding the markers, we have a checklist and when it comes down to what are we looking for from a demographic standpoint? What are we looking for from a median household income standpoint? What are we looking for from a net rentable square foot standpoint? These are all really important things when you're factoring in is does this make sense? Where are the rates at? How far can we push the rates? And a lot of that's tied to how much income are these people making?
Right.
Higher income, higher rates, so you're looking at a lower income, you're not going to be able to get higher rates typically. So a lot of those things correlate. For me, that one of the biggest I guess and most powerful things that I look at when it is you the net rentable per square foot. That's going to look at the population and how many square feet are available. And typically we like to see, depending on if it's, if you're in Florida, you're in Texas, you're in Arizona, there's no basements. So that can vary the number a little bit.
Mm.
We typically like to see that number around 10 or below, unless it's in
So
Florida or it's in,
what does that mean? 10 or below? What
yeah,
translate
10 or
the
below. That's
numbers for
just
us?
the net rentable square foot per capita. So you can go, there's tons of these software companies out now that,
Mhm.
if you really want to get into it and be analytical and do things sophisticated, you need to have this data. Without
Right.
this data, you're going to have a real hard time being successful. And that's why, we have, Rockstar Underwriter. And without him, we would definitely have our work cut out for us. So it
Yeah.
really, having someone that knows the numbers, that understands how to read the data, that knows, I mean, you can get as sophisticated as, some of those things can be put to the wayside if you're looking at heat maps and traffic patterns because you have your store located, on a highway that's getting 70,000 vehicles per day, and it's kind of off the beaten path a little bit. So there's little things that can sway that too. So it's not just a black and white.
Mm.
Sometimes you got to read a little bit more into it. But yeah, I mean, it really comes down to, those markers, your demographics, your median household income, your traffic counts, all that fun stuff kind of combined tells a picture.
So when you're looking at new locations, you want to expand, you want to bring on another facility. Let's say it's an existing one. Are you looking for situations where you got mom and pop operators where there's potential there to, maybe they're under renting the place or they're not charging market rents or something? What are you looking for when you're trying to buy an existing facility?
Well, 100%. Yeah, for us, we love the value add, cash flowing opportunities. We love day one cash flow. And that you just said it, that, mom and pop operators. If you look at something like, multifamily's 80% is owned by institutional capital. You know, if you look at self-storage, it's almost inverse of that. 70% is owned by mom and pops. So, not nothing against mom and pops. I love them. I love working with them. I love buying from them, but typically they're not as sophisticated. They don't know how to push rate management effectively. Like I said at the beginning, we bought a facility that was 99% occupied. That's really a red flag that they don't know what they're doing. To be quite honest, but
What
the
so what
mom
so just out of curiosity, what's like the sweet spot for you? What are you guys targeting for
80,
vacancy?
88 to 92 is really you're running at premium efficiency.
Got it. So let's say 90% just for big round
Yeah.
numbers.
Yeah. Yeah.
Got it. All right. So
Yeah.
you always want to have kind of 10% vacancy. You know that you're
Yeah.
charging a good rent there. Okay.
Yeah.
Yeah, that makes sense. Okay. So as we're having this conversation, Matthew, it's like end of Q1 2025. Where are you guys looking to take the business over the next, let's say, 12 months?
Well, the next 12 months. So we've done four acquisitions over the last, call it 6, 8 months. We're hoping to double that over the next 6 to 8 months. So right now, luckily we just got a wonderful deal in Florida under agreement this past weekend, and fingers crossed we'll have two more here in the next day. I had my phone on. Apologize for that, but I think that might have been the call on that one. So yeah. So at the end of the day, we're trying to just double what we've done previously over the last 6 to 8 months. And obviously when I started this in 2022, 2023, the market kind of got flipped on its head and interest rates and all of that fun stuff. But now we're kind of seeing that bid spread, come down to reality where I think we're going to start to see, quite a bit more action on the acquisition side throughout this year.
Oh, that's exciting stuff.
Yeah.
If you were giving a piece of advice to somebody who's got some familiarity with real estate investing, but they haven't done self storage yet, what would be the advice for them, like to get their feet wet in this asset class, to get rolling with it?
A consultant's worth their weight in gold.
Yeah.
That's it. You might see the hourly rate that they might want to charge you, et cetera. But when it comes down to you putting substantial, whether it's hundreds of thousands or millions of dollars, that's a blip on the radar for you, saving you from essentially, making a mistake that's gonna end up costing you at the end of the day.
Yeah, good advice. Matthew, I'm sure there are a lot of people watching or listening to this who would like to connect with you and find out more about what you're up to. If you had to send them one place, where would that be?
Right to our website, it's www.storagepointcapital.com.
Perfect. Matthew, this has been a lot of fun. Thanks for being on the show.
Awesome. Very, very, very nice to be here, Dave. Thanks for having me, and definitely look forward to talking to you again.
All right, everybody, take care, and we will see you on the next episode. Hey there, I really hope you enjoyed that episode. And as always, if you want to listen to more daily interview content, make sure you subscribe. And if you're an active real estate investor and you're doing deals and you'd like to get featured on this show, then just head over to daveinterviewyou.com. Now at moneypartnerformula.com, we help real estate investors to create a process for predictably getting capital so they can do more deals without relying on hard money lenders or the banks. We do this by building them a private capital marketing system. Now, if you want help turning yourself into a big money capital attraction machine, then book a call with our team to see how we can help. Just visit moneypartnerformula.com to find out more. All right, take care, and we'll see you on the next interview.